When we talk about finding gaps, we obviously have the three patterns that we deal with. There's either three patterns for gaps up, or there's three patterns for gaps down. And the first one is identical indicators, the second one is down touches, and the third one is proximity group patterns, either by location or by shape. Indicator location or indicator shape. Now, with that being said, we have down touches are reversal patterns. Everything in the trading system is a reversal change, or cycle top change, cycle bottom change, and or a gap. And so when we have an alert, we are identifying a reversal. Excuse me. When you search for, like for example, you need 12 identical indicators in the requirements for identifying with a gap up or a gap down. I'm going to be talking about a gap up in this case, because I'm dealing with this particular indicator that we built, and that is, it has excuse me, it has 6 columns. The first 3 columns are above 0, and the second 3 columns, or the right 3 columns, are under 0. And basically it's, for example, over here, this would be trend red down touches, and then we have all those down touches that occur in the above 0 category. And what they're doing is they're touching the line in question, color, excuse me, for example. If in this column we find a blue box, then trend red is down touching trend blue line. If we have a pink box, then in this case here, trend green would be down touching the pink box right here. And the yellow box would be the yellow line, and the tan box, like we find right here, that tan box would be the 0 line. The gray box is underneath 0, and the sky touch is your Zion. And Zion has 4. Zion can, excuse me, when you have a crossover day, that's when trend red crosses over trend green. Now keep in mind, the sky touch is called it's one of 6 down touch patterns, but we call it the sky touch because what happens is that the indicator lines are moving up, and they're starting to go in the direction of the gap up. And so on the crossover day, when trend red crosses over trend green, that crossover day, the day after that, is a gap up. Likewise, there are several days. We use 4 days after the crossover day as possible situations in which we can have a gap up, and we identify excuse me we identify those by text color. For example, in a cyan box, if you've got a dark green, that's 1 day after the crossover. If you have a dark red, it's 3 days after. A black is 2 days after. And a yellow text, like right down here, is your 4 days after. And so those text colors can tell you how many days the crossover has been, or how many days the trend red has crossed over green at this point. And this, in essence, qualifies as a down touch. And remember, you have to have one down touch in order for the gap to occur. There's just very few times that has not been the case. I mean, extremely small. But that's the general rule. You got to have a down touch. This particular indicator here that we're looking at has right now the market is not open, so nothing's moving. But I'll just give you an example here. If you look over here in the three columns, starting in this one, you have in these three columns down here above this line, you have three blue boxes with white text. And what that tells you is that in this case, trend red is down touching under 0, and it is down touching the blue line. Trend green is down touching the blue line, and trend gray is down touching the blue line. So it can be a mixture of line activity. By that I mean something can be up and something can be down, since they're all in that area on the blue line. But it is a triple down touch. Most of the time when we deal with a triple down touch, red is down touching the 0, and green is down touching the blue, and gray is down touching something else. It doesn't happen too often that they're all three down touching at the same time. But that's the point I'm trying to make, is that you can identify these down touches instantly. You can, again, the radar screen is designed to throw several hundred indicators in it, and you can literally scan several hundred in a few minutes. And you can build groups of stocks that you want. You could build, 5 or 6 groups with, 400 or 500 symbols in each group, and literally analyze probably every single stock between $10 and $50 in less than an hour. The radar screen is just powerful. And that brings me to the search methods that you're using. For example, if you have 15 identical indicators, you can have 15 identical indicators and it will not gap because it does not have a down touch. So sometimes it's more wise to start with the down touches, find something that has down touches in it, and then quickly look and see how many identical indicators there are. And you can do that on the shapes patterns within the proximity group, that master indicator, master radar screen indicator that is the proximity shapes. Or you can do it with the 22 market force recognition indicators that operate as one indicator by themselves. In this case here, I have this happens to be the divergent indicator, and when that lit up like that, all of those columns are one indicator, and you can have 30 indicators on the radar screen. But over here, I just left 2 of the 22 MFR indicators on here. I've got Zip Blue, and this one is Zip Zion. And they are an indicator by themselves. And we had so much information inside of each of those that we had to make them separate. And so those are separate, and they would count as 22 of your indicators. This one right here would be 23. Obviously a custom note like right here is 24. The 6 down touches is 25, and you could go on here, and I've got 26, 27, 28, 29, 30. So I've got my 30 right here. And you can piece these together however you want. Excuse me, I would have my 30 if I had all 22 indicators here, but I don't. I just have those 2 of the 22 market force recognition indicators. So obviously this is, if you understand what I'm trying to tell you, this is really powerful. You've got the ability to quickly identify all of the down touches in particular symbols that you see. You can do this on a scanner, or you can do this on the radar screen. Obviously, in the scanner, you need to set up your scans on intervals that are different. Like you'll see 330-minute videos, and that's basically an example of how we locate, how we can use the scanner to locate situations or down touches or whatever they might be prior to the end of the day. Because unlike the radar screen, which is basically live, when those box colors are changing, that's a live situation that we have. The scanner, when you analyze the scanner, it works off of a closed candle. So for example, if you're examining something at the end of the day after the market closes, you're picking up the closed candle of that day on a daily chart. If you run that scan during the hours that it's open, you're picking up yesterday's information. And so you need to, like for example, 330 minutes is an hour before the close of the bell, because there's 390 minutes in the 6.5 hours of trading. And so you could drop that down to 200 minutes or whatever number you want to use if you want to use a scanner. If you want to use the scanner, which obviously I do, and it's a very powerful tool. But my point is that you don't necessarily have to wait till that hour before the closing, because oftentimes your particular shape pattern is going to be where it is at the end of the day by noon on that day's trading, or by late morning, simply because oftentimes gaps that occur have small candles, and so there's really not a lot of movement, meaning that the patterns that are created by the indicators are not going to change very much. So you can start looking for gaps. Like I say, with a radar screen, throwing 300 to 400 or 500, or if you got a really fast computer, you got up to 1,000 you can throw in there to examine at the same time. So however you work it, because you can set up those groups to quickly copy and paste off of a Word document into the scanner, or into the radar screen. It's just a powerful way to quickly examine what your down touches are. Put your divergent patterns on here, like the one I've got right next to this, or add your locations or your shapes patterns, whatever you want to do. This 5 column over here is your 7 short-term trend lines, and I always use that on my radar screens, because it quickly tells you which way the short-term trend lines are going, and that information is a very powerful condition within every situation that you have. Because if you've got a red spike, which is zip red going down under 50, zip yellow going down but above 50, that is a red spike. And if you've got 5 green boxes here, because remember, the green box tells you the line is going up, the red box tells you that the line is going down, the white text tells you, I think of clouds, so the white text is above 0, and the dark red text means it's under 0. And so it can be under 0 and a green box. And so that you can quickly identify where and what the short-term trend lines are doing. Because if you've tried to do this without the radar screen and you try to analyze how many identical indicators you have, it's a tedious process. It can take several minutes just to determine how many identical indicators that you have. But we've built these radar screens so that you've got a system that just adds to the power of the system. Because you can talk about the three-step formula, that has the identical, that has the patterns and that we find, verifying the conditions, and then using a signal to enter the trade. You can talk about the three powers of the system, the sensitive indicators, the formula, that's the three-step process that we have, or you can talk about the procedures power. Now, the procedures power is just basically you're analyzing the indicator lines and you're seeing what happens to price based on the analysis and the examination and the verification of those indicator lines in relation to price movement or anticipated price movement. And if you do that continually, your knowledge grows. You get your ability to see the market, what it's likely to do in the next day or two, it just gets more powerful. Your ability to recognize those changes because you've seen it in the past. And so that process is not exclusive to this system, but what it is, we made that decision a long time ago. I mean, that was 2007 when we started out, more than 10 years ago. And we made that decision that we wanted to have that experience in examining, in analysis, in determining how and what the markets were going to move. Markets, the whole system is based on a reversal recognition identification system. We were after determining the strength of a market push. How could we identify how strong the push was going to be? And there's two ways that we do that with these sensitive indicators. It's through line length. Like, for example, you have a BOC pattern, a bottom of cycle pattern. It's basically a V pattern. The left leg is shorter than the right leg, so the right leg is higher. So a BOC higher pattern is stronger than a BOC lower pattern, because that indicator identifies the push of the market forces. And when it doesn't push it, when it's in a BOC lower pattern, it's not pushing it up strong. And so we know the change in the cycle is going to be weak. So that's indicator line length, or that's one way to identify indicator line length. Another way is like zip red. That thing will move 30, 40, 60, 80, 90 points in one day. It'll go from 4 to 97 in one day. And then the next day, and the price will hardly move that day when zip red jumps 90 points. But you know what's going to happen the following day. It goes up significantly most of the time, provided your other conditions are there. The second primary method that we have in identifying gaps, in identifying strength, is through divergence. And it's because the indicators are so sensitive, they're unlike your default indicators at TradeStation. They're not going to give you the power of seeing the divergent conditions between different things. And because of that, we can pick up on divergent pairs and divergent patterns, and we can see things, that these tiny market force movements that tell us what's going to happen the next day. I don't know of anybody out there that can find gaps before the gap occurs, but this is how we do it. And one of those key things is those 3 patterns. You have to have the 12 or more identical indicators, you have to have the down touch and the trend chart, and you have to have the proximity group patterns, the locations in what we refer to as a normal pattern, and the shapes in a normal pattern. They will occur in different areas, but there are, if you have a particular pattern, you're oftentimes going to have a particular location of the power 4 or power 5. The power 4 is the pink, blue, white, and yellow. The power 5 adds Zion to it. You're going to have particular locations for certain patterns, and you're going to have oftentimes have particular shapes, like they might be in a BOC pattern or a BOC or a 2-day BOC pattern. In other words, down, up, or excuse me, down, down, up is a 2-day BOC pattern. The end result is they're both BOC patterns. They're depending on the radar screen that you're looking at, you're going to get a different color, but you're going to likely get a different shade of color. Like one will be green and the other one will be dark green. And so you know that those 2 colors are related, even if you can't quickly look at the reference box color code alert indicator lines or color codes. So having a radar screen that will pick out, I mean, you don't have to, before, if you wanted to figure out if you had a BOC higher or a BOC lower, you had to click over to the data window and examine, is it higher or is it lower? Don't have to do any of that with the radar screen. If you've had any experience at all in working with this system, you know how powerful the master radar screen alerts are. We built 8 of them, and we have more on the drawing board, and we're analyzing more things, but there's, at this point right now, there's 8 of them with the system. There's the down touches, there's the up touches, the divergence, there's the 7 short-term trend lines. And then the other one, we have a triple combination of those indicators that are equal, those indicators that are a crossover, and then of course we can tell whether they're up or down on that primary indicator. And then of course we have all of the 22 market force recognition indicators and the box color code alerts that go with those. There's many advantages to this system, but when you put them all together, that's when the power of the system really becomes evident. And it all started back in 10 years ago when we decided that we had to understand, if there was any way possible, we had to find. And believe me, we were dead in the water for 5 or 6 years. And then we stumbled into some methods and techniques that worked. And so it's just been the last couple of years when all of this stuff has been put together and fine-tuned. Because you have to, when you have indicators, what works great is if you pair the indicators together. You match them together and you synchronize them. I mean, you tune them up a little bit to make them work effectively together as a pair, giving you opportunities of recognition in changes. And so it's something that has been created, and it is powerful, but it is also fast. When the last comment I'll make is that when I was working on developing the system, I made my first trade in 2007, very first one I ever made, and I Just thought the price was going to go up. I'd built no indicators. I had no indication whatsoever other than that looks like it should go up. And I think it went up that day, and then it went down by the end of the day. And after that, within the next few weeks, I built a couple of indicators. And maybe not quite that fast, but within a couple of months, I had a couple indicators built. And then I had 5 or 6 and I had a better system. And then I've had 10 or 20 indicators. Well, I figured I was going to trade, and then I was going to find a system that would work for me. And all I ended up doing was trading. I wasn't working as a developer trying to figure out how to create a system. But I thought I had a system. But what is more important, the next trade that you make or the system that you use to find the trade? You know, are all of your trades high probability trades? Well, they aren't if you don't have patterns that you can verify good conditions with and then use signals to determine your entry or exit points in and out of the stock. We never put that 3-step formula together until many years after we started. But once we had that just revolutionized the whole system. So again, we're amazed at the system. This is the DnTouch master radar screen indicator. It's got 6 columns. 3 of them are for above 0. And remember, you have 3 fast lines, the trend red, trend green, and trend gray. And they're going to downtouch 6 possible other lines. They're going to downtouch the trio, yellow, pink, and blue, or they're going to downtouch 0, or they're going to downtouch the area underneath the 0, or in the case of gaps up, you're going to have a sky touch. And there happens to be 5 different possibilities for a sky touch after trend red crosses over trend green. And it's the opposite situation for gaps down. But it works. As long as you work the system. It's absolutely amazing. And the radar screen is a very powerful tool that TradeStation has put together. And it will really revolutionize the speed with which you can identify and pick your next deal. So enjoy your time trading, have fun, make it fun. It's an interesting occupation, and it's I wasn't having fun when I was making trades. My inconsistency was horrible. I'd be profitable on one trade and not profitable on the next trade, and then I'd do 4 or 5 of them, and I'd boom, boom, boom. I'd have profit on all of one, and then boom, I'd have one that I'd lose money on. There was no consistency to my trading, and that's how this whole thing got started. Because I had to have a system that would, I figured, you needed to have, if you're going to do something in your retirement, you had to have something that was consistent. You don't want to be losing money when you're in retirement. Not that I'm in retirement yet, but I was anticipating that eventually, soon I would be. So how you look at it depends on your style, but the amazing thing about the DTVB system is the flexibility that it has to conform to just a huge variety of trading styles. But we encourage you to use the steps that we've discussed initially and see how they work. And if you have a better way of doing that, you implement those styles in your process. But you have a basic system that works in this DTVB system.